Hello, welcome back. So a day late and a dollar short on the video this week. I just went in for some surgery on Monday. Everything went well. So I'm getting back to things now. So this week I got a lot to talk about, a lot of different things. I got Korea stats for the month of August, some exciting information in there. And I want to talk about the building of the housing starts in Canada and kind of the trend that we see going on, or the definite trend that we'll see going on right now. But I want to go back to first talk about the housing plan that was unveiled last year and just the breakup of these homes, whether they're detached and apartments and whatnot here. So I just want to give you a quick reminder here. So Canada's housing plan, this was unveiled last year, April 12th, 2024. And you can see here, the plan lays out a bold strategy to unlock 3.87 million new homes by 2031. They're using all sorts of the Housing Accelerator Fund and whatever else they're going to using. So we're going to have almost 4 million homes built by 2031.
It's going to be 4,000.
So, excuse me?
It's going to be 4,000.
No, that's 4 million, almost 4 million homes here.
No, it's 4,000.
4,000 homes. Okay, so I stand corrected here. It is 4,000 homes. So we have an updated one here, September 14th, 2025, right there at the top from Mark Carney here. And he has just unveiled his $13 billion, initial $13 billion investment. And if we go down here, to begin, Build Canada Homes will prioritize 6 sites to build 4,000 factory-built homes on federal land. It goes on to say with an additional capacity of up to 45,000 units. Now, these are factory-built homes, mind you. So we went from almost 4 million to 4,000. Of course, this was a different prime minister that announced the 3.87 million homes, not the current one. So things have changed. Promises look like they're being broken right now, but we will continue to monitor this. Not so happy. A lot of people have been talking about this 4,000 home number, 3.2 something million per home. It's a lot of money, a lot of bureaucracy that's going to be happening, a lot of consultants I'm sure are going to get paid. But anyway, we will continue to monitor this. But let's look at the breakdown of what is being built in Canada right now. So here we have the latest starts data, I believe, from Stats Canada. I took it directly from the site. And this was everything up until the end of 2024, and again, by year. And look at the apartments. The apartments are like 150,000, and detached or singles are declining. So we're seeing this big shift again. You'll own nothing, you're going to rent. You know the story, and it's happening in real time. And I've talked about this many times before, and I'll continue talking about this. Now, I just want to show you here to compare all single family homes compared to just, they're about 78,000 for all single family. So of course, if you add in the semi-detached and the row houses, a lot of those row or stacked towns, mind you, we are still way below, almost only 50%. Now we compare that to the US. This isn't, so this is a Canadian issue, right? It's almost like we're like Europe right now. This is what we're doing. We're building apartments and condo style instead of the Canadian dream, which is detached and even semi-detached and townhouses would be a dream for a lot of people at this point. But let's check out the US. Now this US data is only up until 2021 is what I could find. But still, look at their data. Single family far outnumbers multifamily. So they're on the right track. Now they have about 9 times the population, and their, of course, number of units being built is a lot greater than ours, but they're on the right track. Lots of single family homes. This is what people in North America want, the American dream, the Canadian dream. But in Canada, let's go back here, we have the complete opposite. There you have it. So before I get into the Korea stats for the month of August, let's check out some quick news from the last week or so. So the big announcement today, rate cut, 0.25% from the Bank of Canada. Some people are happy, some people are not. We're now at 2.5%. The neutral rate is 2.25 to 3.25. So almost at the bottom of that. You really can't go much further without stimulating the economy at this point, but it probably will need it because things are really starting to slow. So as Daniel Foch, he quoted here a thing from Ben Rabideau last year, but he says the pain happens during the rate cutting cycle. And it's true. If you look at my home buying recipe, this is what I quote. Interest rates falling, house prices continue to fall, and mortgage delinquencies go up. Same with unemployment. And he quotes from last year, Ben Rabideau, June 5th, 2024. Good time to remind everyone that historically the pain for borrowers starts after the first rate cut. And yeah, there you have all those rate cuts with the dotted lines, the red dotted lines. And look at the mortgage delinquencies after them, they increase. It's all part of the cycle, and it's statistically proven. I've shown it on this channel, and this is what we're going to see now. A lot of cancel culture last week over the Charlie Kirk death or shooting, murder, assassination, whatever you want to call it. And breaking. Mark Civic was fired and removed from all positions as the Las Vegas Realtors Board of Directors after celebrating Charlie Kirk passing. He has deleted his Instagram, Facebook, and other accounts. There are plenty of places where you can leave an online review for Mark Civic. So I just wanted to search realtors. Obviously, a lot of realtors got big mouths, and see if any had got canceled. There was a bunch out there, but this one was kind of the bigger ones of the bigger names out there, and he's from the US, obviously. And Shazzy this week and the last week went down the rabbit hole of watching property tax arrears. So yeah, all these cities here, you can read through them. St. Catharines, Niagara Falls, Brampton, Toronto. Toronto has 29 to 30 properties who owe $500,000 or more on their property taxes. And they're behind total mortgage or property tax arrears in Toronto's $458 million in receivables that they haven't got yet. At Cambridge, they're actually taking people's homes and moving properties to tax sale to recover unpaid taxes while residents face 7 to 9% annual hikes. And I'm guessing a lot of these are the speculators, investors who can't pay their mortgage and, of course, who can't pay their taxes because their tenants are not paying them enough to pay their mortgage, let alone the taxes. And check out this news story on this guy in Toronto. This is insane. $300,000 loss on a condo he doesn't even own. So it's not that he just doesn't own it. You'll see now in a minute the rest of the story.
This building was supposed to be Dimitri Bazios' retirement plan. Instead, it could force him into bankruptcy.
It's causing stress and distress and misery.
In 2020, Bazios and his wife put down a deposit for a 600-square-foot condo in Toronto, valued at $884,000. But as interest rates rose and the condo market fell, keeping the investment property became impossible. The Bazios couldn't close on their condo, and it was recently sold on assignment for $590,000. They're now on the hook to cover the difference.
And now I have a mortgage on this property for $300,000, and I don't own it.
The Bazios story is becoming more common in markets like Toronto and Vancouver, where condo sales have plummeted.
So he has a $300,000 mortgage. Not that he lost $300,000, he lost $300,000, but he has to pay it on a mortgage on a property he doesn't own and never owned because he assigned it to somebody else. And if you heard in that news story, it was an investment property. So he thought this was a good idea, or someone told him it was a good idea to buy a pre-construction condo, and he's going to be rich one day and he's going to have a great retirement fund. So is it his bad decision, or was he duped into this from some investment guru realtor? I don't know. I'd like to really know what happened behind the scenes, though. All right, moving on to the national statistics from Korea. Canadian home sales post best August in 4 years. Wow, this market's doing amazing here. Let's check this out here. Can't wait to see these numbers. So there you have it. August total sales on the right in the orangey red. Just below the long-term average, though. But best in 4 years. Oh, what a great headline there. The most important thing here looks like the sales. And next, we have the August months of inventory or supply, which is the highest in 6 years. So the inventory is doing even better than the sales here. And last year it was 4.2 in August. This year it's 4.4 months of inventory. I think this should have really made a headline too there. I think supply is what's needed. More sales are not what's needed. Supply is needed in Canada, and we're seeing it come online, thankfully. Next chart here, we have all months, and this is every month back to 2010. And you can see this year, our low, and I talked about this before, is like the highs for the previous few years. So again, inventory is growing. That's a good thing. We'll keep bringing house prices down, and sales can do whatever they want, but people are not going to buy unless there's affordable homes. Sales to new listings ratio, worst August since 2019. And it's at about 51% right now, just over 51%. And Korea has a balanced territory of 45 to 65%. So again, it is the worst out of any other August in the past 6 years. Next, we have the national average price here, residential price, down 1.3% month over month, or $11,000 from July to August. It is up 1.8% year over year, or $12,000, and it's down 18.5% from the peak, or $151,000, now sitting at $664,000. This one here is the big news. We are seeing this bearish pennant play out. I've talked about this. I've been tracking this for months. This data, actually, this bearish pennant started almost 3 years, or just over 3 years ago in 2022. And look at it. It just broke to the downside. And it's been tight. It's been really tightening in there in that tip of that pennant. But look, it finally just broke. This is big news. we're going to see further movement to the downside on prices if this pennant is going to play out the way it should. And lastly, the mortgage payment compared to the average rent price, and the rent price is as per rentals.ca. $2,173 to $3,138, almost $1,000, just under $1,000 difference. You're still better off renting in Canada than buying by a long shot, and still got a long way to go. So until this tightens up, and rent prices are not increasing, like rent prices have been flat. They actually did dip down for a bit, but at best they've been flat. And that mortgage payments are coming down, but prices are coming down too. So again, we're seeing that cycle play out where prices come down and mortgage interest costs come down too, which is great. We will hopefully get back to a reasonable mortgage payment in the next few years, but there will be deals along the way. But I think it's still a little bit too early for the good deals. All right, let me know as always what you think in the comments. I'm happy I made it through the video this week, and until next week, I'll see you then.